Let's go to Alan Uckman for the trade of the morning. Standing by. Alan, good to see you, sir. Joining us from Bullseye Option, of course, chief strategist. And you got Rivian on your mind. Another one this morning that's up despite an analyst cutting the price target way down on this thing.
And the key is, just like you said with the last stock, there's a lot of work to do. But before we get there, let's talk about yesterday. Yesterday was 1 month since the low in the S&P. And it's been a lot of angst and agony for a lot of people. But I think I want to get into the hurricane business. What was the quote from Jamie Dimon about it's not headwinds that he's seeing, hurricanes? And he had a profit of $8.5 billion for the quarter. So that's a good business to be in if you're making $8.5 billion in pure profit in a bad time.
Not bad at all. Hey, Alan, so before we get to the Rivian trade then, I mean, we're up pretty sizable this morning. And it kind of seems like the market here is rallying regardless of the news. What do you think? What are you drawing there? Walk me through it.
Well, I think the sentiment has shifted a little bit. The negativity is still here. But I think we are moving forward, and the Fed's getting its intended consequences here. We've got oil down. We're at 100 today, but still, it's got slapped down. And if you look at the yield on the 10-year note, it's been stable under this 3% level. So those are positive signs. That's what the market wanted. That's what the market needed. And if you look out at the futures, you can see rates top out at 4% at the end of the year, and then they decline from there, 3%, 3.5%, all the way out to 2027, 2028. So I think if people are starting to be aware of that. One last thing about the macro picture. Interest rates on mortgages, I know it drives people insane, but obviously you had a lot of lead time to refinance or buy a home. But from 1970 to 2010, rates were above 5%. That's where we're at now. So we're normalized our rates. They're not high. They're still pretty low in comparison. All right, let's get back to Rivian.
All right, let's do it. All right. I always appreciate the Nuckman macro take, though. I love it. Rivian's up 5%, and Deutsche Bank cut their expectations from 69 to 46. Who cares what Deutsche Bank thinks about Rivian, right?
I wasn't going to say that out loud, but you could read my mind. So if you look at the chart, there's $100.
Yeah, let the record show I don't think that. I was just communicating what I saw in your brain.
So we've been trading between 20 and 30 now for a while, really between 20 and 40 for the last 2 or 3 months. 30 is this midpoint pivot that we popped above. So that's a very positive sign. I'm looking at the October 30 call. It's got 3 months of time. Again, this was a $100 stock not so long ago. We've got a nice bottom base in place. We also had that bullish divergence I look for, where it made new lows but not new highs and implied volatility. So there's a number of positives and the smart money accumulation that I'm seeing with my indicator. Lastly, I'm going to throw in Tesla. All right, Tesla is kind of looking like its downturn could be stalled. It's been between 600 and 800 for many months, and now it's above the 700 midpoint level pretty solidly. So it's got the same price pattern here as this Rivian stock in that same sector, and it's looking like it wants to get back to the top end of the range at least.
Okay, so the 30 call, and you're hoping Rivian kind of follows Tesla and its relative strength here next to the market overall at $3 in the money. So you're gonna have to pay a little bit because you're already in the money, and it's a pretty volatile stock generally. So does that change your approach at all, Alan, when you're buying the in-the-money options? Do you change your approach for strike or where you put it on a stock with vol that's very low versus a stock like Rivian where vol is very high?
Right, I do. You have to make those adjustments, and that's the balance of the game where we play with these in-the-money options. So in this example, I wanted more time, so I went it out till October. So I had to get a little bit further out, less in the money in this example. Either way, we need this stock to move up. And if the stock moves up, this option will gain in value nicely. At $40, this is worth 10, so you're going to gain about 50%. So all we need to do is get to the top end of the range, and we're looking, in a good position. Regardless, I know you like me to say irregardless, which is not a word. Regardless, this stock needs to stabilize and break out of this range to be successful. And in the money option gives us the right to be long from 30. So I'm pretty comfortable with that to see what it can do for the next 98 days. But in the big picture, the macro market, we could see a lot of short covering and recovery if and when that S&P goes back up and fills in that gap at 4,000. I still look at that as the near-term objective. and everybody wins when that happens.
Okay. All right. Everybody winning. Everybody would love that, Alan. So
as far as the Bulls go, everybody that's optimistic and yeah, and is positive.
Yeah, that's correct. You know, not everyone's bullish, but most people, even the Bears, are bullish because they probably got some money in a retirement account somewhere. So
right.
Unless you're real nuts. Okay. Thanks, Alan. Good convo, fun chat. All right, the 30-strike Rivian calls to play the market bounce back. But what if? Dollar's still in an uptrend. Yields this morning are going higher. So do you just forget how to hedge? No. You got to figure out some strategies on how to navigate still potential for rocky times. We haven't even put in the higher high for the NASDAQ yet, but we are so close and really trying to. Market's up more than 1% right now. We pulled back from the highs. We'll be right back.